want to bring you a new guest, Jane Fraser, who is the newly named Citigroup president. She was just named late last year. Before we bring her over, we do have a question from a poll for the audience, and it's about the second wave of the COVID-19 crisis, obviously something that's sending down the market today. The questions are whether, yes, people think there will be a deadly second wave and result in further lockdowns. No, that infections will steadily decline. Or a third option is that the virus will remain, but it will be prevented from having a second wave. And we have answers coming in now. By the way, Jane is a very good person to start this question with, given she led the COVID response at Citigroup in North America. It looks like a lot of people really are expecting a second wave that could be very deadly here. About half the audience believes so, and some believe that it's about half now believe that the second wave will be prevented. Jane, how are you viewing this issue as we work further into the year?
Well, I think we're being very focused on data as we're looking at it and what is the health data telling us. And we've seen very different stories in different parts of the world. In the States, in many parts of the States, the first wave isn't over. And we're still waiting to see whether we can bring that curve, not just bend it, but bring it right down. And those are things around community spreading and around hospitalization rates and around the percentage of tests that are positive. So I think it's too soon to know where it's going to be, and the doctors are probably the best people placed to tell us.
That uncertainty that you're seeing, obviously you have a lot of planning to do for a lot of people in a lot of different types of business lines, right? Citi has a lot of folks that they have to consider that are not the traders that also have to be coming back into the office at some point. You know, we have UBS that said a third of their workplace can permanently work from home, and JP Morgan saying as much as 20% can be back in by Labor Day. Where are you on that spectrum?
Well, I do believe that how we work has really changed pretty irrevocably. However, I'm not prepared to declare the death and demise of the office yet. And so when we're looking at the future, we do expect people to work more flexibly. We've proven to everybody's surprise that it is quite easy to work from home. In many jobs, we never imagined that you would be able to before. And now what we're looking at is, we have to wait and see what happens. The health data, I think, will determine what percentage of us is back in different parts of the country in the future. And in the long run, I think it's very important that we're back in the office. There's a belonging that's very, very important there. We see it in terms of the culture, particularly in banking. There is a daily fix of collegiality that is somewhat missing on the Zoom calls. There's the apprenticeship that you get, the feedback as you walk out of a meeting from someone more senior. Watching others in action and then getting that coaching and many different intangibles from being in the office, particularly new recruits coming in and joining an institution. So I think being back is going to be important, but the paramount piece is going to be we've got to keep all of our people safe. And so that's going to be the priority.
Jane, how does this change for different jobs? You mentioned the bankers needing to be back in the office sooner to be able to interact with each other, but are there jobs that just don't need to be back right away?
I think none of the jobs need to be back right away. Beyond those, there are a few that are in the office in the industry at the moment. But as we were hearing some of David and others talking about earlier, even trading, which we never imagined could be done so successfully from a remote model, as being pretty effective. So I think it's going to be a question of until people feel comfortable that they will largely decide from themselves whether they want to stay at home, how they feel about a commute, what's going to happen with childcare, as to whether people are going to be able to come back or not. And then in the long run, some jobs will certainly be most likely to be done from home, or that flexibility being provided. and others generally preferable to have in the office from an infrastructure and other perspective.
So I really want to jump also now to the consumer because that is
Yeah.
something that you oversee, and it's something that perhaps you have more experience with than anybody on our entire conference. There is a big question mark about demand side destruction and
Yeah.
how much that can create a hole in the economy moving forward. How much are you worried about this?
I am worried about it. I think there is a veritable alphabet soup of scenarios out there for where the economy heads next. So it's, the root cause has been a health crisis. We don't know where that's going to go, and therefore what are the ramifications for whether it's a partial V recovery, where there's a W because there's additional lockdowns, and the impact that's going to have. What we are seeing is in this first act of COVID, there has been incredible success from a lot of the government programs, and that has helped the consumer. I think when you look at the small business program that was put in place, 80% of employment in the US is small businesses and medium-sized enterprises. So the support into that group of employers has been very, very fundamental in helping maintain payrolls. The support into unemployment benefits also being critical. So we've been surprised. While we had about 2 million or so customers who have signed up for relief programs in the States, a very large number of them carried on making payments. And we've seen the re-enrollment rate into these programs down in the single digit as a percentage of the previous enrollees. So this first phase has worked well, but the future at the moment is anyone's guess, and you've got to think scenarios.
So we saw a very significant government stimulus in the first part of this crisis.
Yeah.
$1,200 checks given to Americans. But do you think that once some of the stimulus starts to wear off this first round, that we'll see a rise in defaults from the consumer?
Yeah, I think it is a distinct possibility. I know we've seen a number of people come out of relief programs and then go back to paying credit cards, for example, in full. And I think the big question will be how much of this is because it's from the stimulus programs, and how much of it is people going back to work again, which I know all of them want to. So at the moment, it's looking optimistic. But really, the health situation is going to drive what really happens, and whether it's this W or how strong the V ends up being. And Asia's been a little concerning. Asia has been very sluggish in the return of the economy in many of the sectors. The consumer has been more cautious about spending. And even though the health impact there has not been as great, the consumer is far from firing on all cylinders in Asia, and I think that's a point of concern for us here in America.
Now, given in our conversations, the consumer is becoming such a big part of what economic growth rates could look like moving forward, can you hone in a little on what your biggest concerns are? Where are the areas where we may see the most pain points moving forward?
Well, if you look at from the consumer perspective, first of all, unfortunately, who got hit hardest? The youth, minorities, low income, because many of the individuals who were able to work from remotely and from home tended to be in the higher paying roles. So the immediate hit was to some of the more vulnerable parts of the population anyway. The health crisis hit the elderly. Whereas the economic impact tended to really hammer at the youth and the minorities, as we know. So that I think is a point of real concern for us to think about. How do we help them recover? The other question that comes up that we're going to have to we'll find out before too long, which of the different corporate sector will need to restructure because the demand just doesn't recover, and that we don't need the capacity we have. And what does that mean in terms of a round of corporate layoffs in the sectors that have been hit the hardest by this, or that may be hit by a longer term macro slowdown? So there are some additional acts of this play to come, and I'm hoping there's only two of them, and it's the second one's very positive, but it could be several.
So, given that minorities did feel such a brunt of the pain in this crisis, I do also want to talk about the protests and diversity initiatives more largely. We all know that Wall Street has faced kind of troubles with diversity for a long time here. An interesting statistic my colleagues have reported out is that out of 80 executives listed on the teams of the six largest banks, there was only one Black executive, and that's Mark Mason of Citigroup.
Yes, my friend.
Why? Yeah, yeah, exactly. So
Yeah.
why do you think Wall Street so largely has failed at their diversity initiatives over the last couple decades?
I look, one can point to a host of different pieces. I think what is more relevant is how do we actually use this opportunity to set a vision for better and to think about what is it we need to do differently going forward rather than dwell too much in the past as to what are different issues. I think we need to understand, listen, understand what the different concerns of our Black community in particular are, and our other minority colleagues. But the piece is, what is the vision for better in the future? What is it that needs to change? What do we need to do radically different? So we need to break old norms for sure. We need to break some old stereotypes. We need to get rid of bias. But the main thing is we need to build a better and more equitable path going forward. Some of these things, the numbers matter. Right? On my scorecard, I have metrics for the percentage of Black colleagues that I bring into the bank. I have metrics around the percentage of women that we have in representation goals. And we've made that very transparent within Citi. We call it the ugly truth. Women are paid 73% the median of what men are, because we just don't have enough women in the higher paying and the more senior roles. That is even more true in our Black population. And it's true in different parts of the world with different populations. But I think the piece now is to begin moving away from the ills of the past and behaviors of the past and start converging on a positive vision for the future that I think we've got a real shot to make material change in. And some of that will be also providing support, not just in our own shops, but also what are we doing in affordable housing, in low income communities? What are we doing to work with activists? What are we doing to increase the credit aperture? So we've all got to act in society, not just in our own four walls.
That's a great point, Jane. And I want to get your opinion here. The banking industry, I think people are going to look around and say, how is it that underrepresented communities are so have such low banking penetration rates right now?
Yeah.
Citi operates in such big cities, and you had mentioned something to me before about different ways of underwriting credit so that banks like Citigroup can be addressing those communities. Can you speak to us a little about those ideas?
Absolutely. I think because we operate in so many different geographies, we've got the benefit of seeing where Asia, frankly, has been much more successful in driving inclusive finance. And we've seen many markets there where there is really not good data on which to make credit decisions for lower income communities. And so, the use of machine learning and data to bring data from all sorts of different sources to replace the FICO score, as it were, and open up the credit aperture, open up access to credit. And you marry machine learning with also different digital channels. So the QR code type systems, free instant payment systems that we've got in countries like Mexico, India, China, obviously the leader there. Those are all enormous opportunities for us to use this supercharge to digital for good beyond just a lower and more seamless customer experience. Let's drive it to help address some of the inequalities and lack of access in the markets. And I think that's an important role for the banks to play. Use that innovation so that we bring everyone along with us and don't leave people behind this time.
So I have time for one more question for you, and I want to ask something that involves Citi's global reach here, because given we're seeing so much tension arise between China and the U.S., given that the COVID crisis has really shined a light here on supply chains and the globalization of the companies in the world, how is that going to change? How are supply chains going to fundamentally change business as we know it today?
So I think what's happened is COVID-19 has accelerated some of the changes that we already started seeing from our clients and how they were thinking about their supply chains during the China and US trade tensions and disputes that were going on. And you've seen typically supply chains used to be linear, and now our clients are moving to far more resilient, far more diverse supply chains, not dependent on one individual supplier. We're also seeing more nearshoring or onshoring, so you don't have issues with some of the breakages we've seen, from COVID. We're seeing more regionalization of supply chains, so US north-south, US down to LATAM, Mexico in particular, replacing some of the east-west chains that we'd seen before. So more of this regionalization going on. Ironically, everyone says globalization is dead, but I have to say, in the trade side, our trade origination has been up 40% year to date. So the clients are very busy innovating and making structural changes, and COVID certainly accelerated that. And again, not sure whether it's better or worse. It's just different.